As far as the operations concern, what operators are looking, the deal flow has slowed down a lot. So we've talked to certain operators who are like, you know what, we're just gonna sit it out for the next couple of months and just wait and see, how it shakes out. The interest rates, as you know, has gone up a lot, but it's coming down already.
So you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Catani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcatani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Catani, and I'm joined today by Alex Kholodenko. Alex has 10 plus years of experience in real estate. He started investing in single-family homes, tax deeds, mortgages, and fix and flips, and quickly realized it took too much time away from his demanding tech job and family. He had discovered through studying and research the power of real estate syndications, so he had invested in 50 plus syndications with his own funds. He spent 20 years in the high-tech software industry in Silicon Valley, working as a busy tech professional for large financial institutions and startups before leaving corporate America to pursue his passion. As co-founder of Wealthy Mind Investments, Alex saw an opportunity to act on his lifelong passion for educating and helping busy professionals to achieve financial freedom with commercial passive real estate investing. Alex, welcome to the show.
Thank you. Thank you, John.
Very excited. And Alex and I know each other through Raise Masters. So shout out to Adam and Hunter. Another love having a fellow Raise Master on. It's a great network. Cool. Well, very excited to chat today. I love your business structure, but kind of take us back to the beginning. We obviously kind of alluded here. You were in tech. When did you discover real estate and the power of real estate, and what's led you to where you're at now?
Yeah. So sounds good. Thanks for having me. I appreciate the opportunity to share my story. So I'm originally from Ukraine, and you listen around that thinks like, what is this guy with a long last name from? So originally from Ukraine, immigrated to America 30 years ago. I was a young guy, just trying to find my way, pursuing American dream, and did all kinds of odd jobs in the beginning. Ended up getting a degree and then getting into software tech industry. As you know, Silicon Valley was booming back in the 90s, so I was kind of riding the wave and kind of stuck in the corporate world for 20 plus years. But I think that I've always had this kind of entrepreneurial thing in my veins, in terms of like, I wanted to do my own thing. Just the other day I was in Florida traveling, and I went to a museum of Dali, and he's a rebel. So I considered always myself like I'm a rebel. I have an assignment. Don't tell me what to do, I'll figure it out on my own. What's the best way? So there is an obstacle, there is a project out there, and I'll do it my own way. So long story short, about 10 years ago or so, I started to really asking myself and questioning myself, in terms of the corporate ladder. Should I just continue to build my career in a corporate, or branch out on my own? And the answer was I wanted to do my own thing. So I started to kind of explore what could I do, what kind of business I could run on part-time basis that eventually will lead to an exit. And after exploring many other opportunities that are out there, like all roads lead to Rome, I said, you know what, why am I reinventing the wheel? Real estate, it cannot be outsourced. It's a hard asset. People will always have a demand for real estate. And I always liked the investment side of it. At one point, I was actually a financial advisor. I had licenses and all that. So I pursued that, and it didn't work out. Wall Street was not my thing. And I started doing flips with a buddy of mine. He was flying to the different auctions and buying these little homes. And so I tried that, and I completely sucked at it. It's just not my thing. That business model did not gel with my personality. I'm terrible with construction, and it just didn't work. But I knew that there would be something else out there. So luckily for me, I'm a high net worth guy. I've been in tech for a while. I built a good portfolio. I started to shift my portfolio from active income to more passive income. So I ended up investing in many syndications just to try it out to see, what works, what doesn't work, what kind of tax benefits am I going to get. So because I'm very analytical, it took me some time to actually push the gas pedal and get involved on the active side, but that's okay. Everybody has a journey. We all have a story to tell. And some of the syndications I did really well. I doubled my investments on some of them. Now, full disclosure, I actually lost some money on some of these too. So there is always an element of risk involved. But over time, what I did was I actually became really good at analyzing deal, finding good operators. I went to a lot of conferences, read a lot of books. So at one point I said, well, what if I can leave my job? It was actually a scary thing to say out loud because being in the Valley and in a corporate, you make a lot of money. Six-figure income is not unusual. In my case, it was significant income. And I had a cushy job. I was actually a remote employee. I was traveling around the United States. I was an account manager for a tech startup. I had stock options, but then I still didn't feel like I cared about my job. There was always this kind of feeling that, well, tomorrow you might be gone. Do they really need you? So in 2019, I think we decided with a business partner of mine that we used to work together for 3.5 years in a mortgage company. That's where we learned underwriting and real estate. We thought, what if we start our own firm? And we probably know a lot of people like ourselves, in their 40s, established guys, families, kids, have a lot of money, but they're always insecure about the job. They work long hours and they don't have financial freedom. They work around the clock. They have high salaries, but they're kind of tied to the job, right? They're kind of slaves to paycheck, W-2 paycheck, right? So we started the company, Wealthy Mind Investments. I'm a true believer in the mindset. I'm a big Bob Proctor, Tony Robbins fan. So I thought, if you can create an idea in your mind that you are financially independent, you will manifest. And Wealthy Mind Investments, right? We attract people that have that kind of mindset. They want to be wealthy. They want to be independent. And real estate is just a vehicle to get there. And we reached out to many contacts in our network about working with some of these big operators, right? And most of the operators told us that, you guys are too small. You're just starting out. You're not interested. But some of them did say, I will give you a shot. And we did our first raise in Charlotte, North Carolina during COVID. If you remember 2018, that's where the COVID just was starting out. And the stock market tanked significantly, about 40%. So we're actually reliving this now, where a lot of people I don't want to invest in real estate. I'm too scared. But at the same time, stock market tanked again about 20%. I personally think there will be another correction for another 10-20% or so, and it will eventually recover, right? So we did our first deal in 2019, and since then we never looked back. We've done 14 other investments, co-investments. We're LP in many deals. We operate in a fund-of-fund model, and we're growing, we're scaling. We have about 200 plus investors since then. We raised over $25 million in 3 years, and it's been a lot of fun. It's been a lot of up and downs. I just quit my job last year.
Oh, wow. Okay.
I did it for 2 years. I was busting my butt, doing that and building the business. So I wanted to have enough of momentum to leave my job, right? So, a lot of people, I think a lot of people, there's no right or wrong how you can do it, I think, but what I've seen and observed, a lot of people leave their job and they're kind of naive. They don't know what it takes. They don't have enough momentum. They don't have the right mindset, enough system in place. And then they go back. They go back to the job, which I didn't want to do. I've seen many people have done it. So I said, you know what, I'll get enough momentum going. I didn't have enough income. Some people say, I'll replace my income. And it will take a lot of time for you to replace your income if you have a high paying job. So I thought, you know what, I'll just have enough momentum and I'll have enough income to cover my base. Then I leave. And I left on good terms. I ended up having some of my co-workers as investors, which was pretty cool. I actually hosted in-house, brown bag lunch and learn educational webinar about real estate. And some people said, you know what, I trust the guy. I've known you for several years. I ended up working at the company for 2.5 years. So some of them ended up investing with me. And, here we are today in the middle of another race.
I love it. I swear you're always raising capital. And I love that so much. That's such a great story. And I love that you always knew and could even feel, like you fully admit, yeah, I was very high paying job and just wasn't fulfilled. And I love that you wanted to find other passions, because I know, and I'm sure, as you know, so many people can resonate with that, right? And so that's great that you're educating first, right? That's the first thing, educate people, show them the power that real estate can create, and then hopefully, help people follow suit if that's what they want to do. Exactly. I'm sure a lot of people want to stay in their job, but create that passive income, on the side. And that's where you come in. So for those that are kind of new to this, give just a high level fund to fund model and how that operates.
Sure. Yeah. So the way it works is that we work with some of the large operators that have our selection criteria is pretty high. We raise the bar pretty high. So we need to have an operator that has $1 billion under asset management plus. They have to have 20 full cycle exits. They acquire the property, they renovate, and they buy. We are in a multifamily value add 200 plus unit B2C class type of assets. And we must have a fully integrated property manager with our partner. We've seen many horror stories with third-party management, so we said we're not doing that. They have to have experience, right? 20 plus exits. By now, when they've had so many exits, they already figured out what works, what doesn't. We like to go to a market that this operator already fully established, meaning that they've had 5 exits. They maybe own 10 plus assets in that market, because anytime you go to a new market, there's always an element of a risk. So that's what we do. We find these partners. Usually it takes about a year to develop the relationship with such partner. Why it takes so long? Just because everything is slow. It's like a dating game, right? So you don't want to jump into a quick relationship just to have your Mets need. You need.
Yep. Yeah, that's true.
So what we do is, we visit their corporate office. We invest SLP with them first. We check to see what their reports look like, quarterly reports. We see what their operations like. We visit their assets. We meet the team. We meet the founders, but we also like to see, what does it like to work for these founders. We become close with the asset management team. Are they open to introduce us to them? Are they responsive? If we have a call with them, do they come back with an answers and things like that? We pay attention. Do we gel with them? Do we have the same vision? When we go out for lunch or dinner, is it just kind of a formal conversations, or are they the nice people that we like to do business with, right? So all of these important ingredients make sense, and ultimately we create an agreement with them where we, as a firm, Wealthy Mind Investments, become an LP and invest in their offering. We come in between $3 and $5 million, and we negotiate better terms, economics for our investors. We typically get a higher pref rate. We really like that component, and that's how we stand out. Because a lot of people, investors, will ask, "Why should I do business with you? why should I invest with you versus the investor, the
Going
main
straight to the
operator
operator.
director, right?
Yep.
And that's where we come in. We say, well, we're writing $3 million, $5 million checks versus your $50,000, right? So we will get you better economics. And we create our own offering. So we have a security attorney on staff that creates a package. It's a customized package. We have our own investor portal. So the investors go to us. We are the main contact person. We also have on-staff accounting team that does distributions and K1s.
That's awesome. I love it. And just to clarify, guys, essentially what he's doing is it's just like a fund, right? But in this case, all the investors pull their money into the fund. The balance sheet for the operator shows one LP as Wealthy Mind Investments, but in that is all of their investors. And then are you only doing single asset funds? So you just do.
We've done several portfolio deals as well.
Okay.
But instead of investing in a single asset, we are investing in
But one operator.
11 assets. No, just one operator, but sometimes our operators also work on portfolio deals. So we've done deals for 12 assets. We've done last year a deal with 21 assets in
Holy
7
cow.
states. And it was a huge raise. And we turn people down. I mean, anytime we have a portfolio offering, there's so much demand because people like diversification, right? Instead of one asset, you end up investing in 10, 11, 12. So even on the last raise, we turned down about 700,000 back because people wired past the deadline.
Interesting. And so do you have to cap, right? You said 3 to 5 million. Do you have to cap it? Like what if what if it turned into 8 million?
No, we have a cap. So the way it works is that, so people know, we get a deal very early from the operator, including underwriting, and we analyze the deal. We have a committee, we have a financial analyst, we have a couple of advisors. So we decide yay or nay. And then when we do decide the deal, we commit to a number. We commit to special allocation. So the main operator they do allocation very early. Right, so they do something on their own, right? Because most likely they're large operator, they have their own investment base, right? But periodically, they are short, especially if they do multiple large acquisitions in any given month, where they raise maybe 20, 40 million on each deal. It's always an element of a risk. Can they do it on their own, right? Can they raise 60, 100 million bucks on their own with their own investment base? So they reach out to potential groups and partners like us just to fill that gap, just to feel, what, it's going to be a slam dunk. We can do 15 million, and then we'll give 10 million to Wealthy Mind Investments and maybe one other group. Sometimes we're the only group, in a deal.
That's awesome. And just so kind of go through now, you kind of alluded to it. You obviously have a very strict vetting process. Kind of go over that, that you use, before you'll do work with an operator.
Sure. Yeah. So I have done a lot of investments on my own, and I burned a couple of investments in terms of I lost the complete capital. So now I'm very do a lot of due diligence up front on the operator. I ended up investing early in my career with some small operators, one-man shops, and the couple of them were literally crooks. One of them will, start commingling the funds, start taking money from investors on his own travel. The other one went to Greece, totally disappeared. And we have a due diligence check process in terms of, how do we without the operator? We run background checks on them. We check the references for at least 5 references from most recent exits before we start working with them. We invest with them as LP, as I said earlier. So we vet them out. We check the underwriting. Do they have enough reserves? There multiple exit strategies. Are their fees reasonable? So we have certain checklists. that we go with, and most people do skip on that step. They just get excited about the potential high IRR or marketing material, which you cannot do that. I mean, our reputation is on the line. We also co-invest our own funds into each offering, so we have a skin in the game as well. And you really betting on a jockey. You know, the analogies that I have is horse and a jockey.
Yeah.
An operator is your jockey. I mean, there's a lot of pretty horses out there, the champions of the champions, with pretty eyes and nice teeth. But you need to check the operator. You really need to make sure that there is no red flags. And if there isn't any, you have to be able to walk away. And no matter how desperate you are, and no matter how pretty it looks like on the surface.
Absolutely. And, those red flags can all look different, but one you talked about earlier was, if they won't agree to a background check, right? I mean, that's something where it's like, okay, something's there.
Well, even if they agree to it, there is always something, there might be some litigation or suit. I want to hear the story. What really happened?
Okay. Yeah.
Because if you've been doing this for a while, there might be something on your record,
For sure.
which is, it happens. Just the other day, we're working with one operator, and there was a lawsuit against property management, one of the property management companies that they didn't have back then. Now it's fully integrated, and they're suing them because they think that they overcharged them and they still owe them the money, and that there were no receipts, so they couldn't prove that they own it. But it's still, that kind of litigation is still pending. I'm okay with that.
Right.
I feel like, well, if they don't have receipts, why do you have to pay?
Yeah. And that makes sense, right? I mean, like you said, you do it long enough, especially get up to that level, there's a lot of moving parts when you get to that high up, and, it's almost a when, not if kind of a thing. So once you've obviously vetted all of that, you guys invest in one of their deals first as just passive investors before you'll take one of their deals to your investors. Now, obviously, you're in the middle of a raise right now. Things have changed, are changing economically. Rising interest rates obviously being the most obvious one. What are you seeing in these operators who are still doing deals in their underwriting that they're able to still do deals despite changes?
Yeah, so things have changed even on the investor relationship side. It's harder to raise money. A lot of people kind of concerned, recession, media is media, right? Bad news sells really well. And the fear kind of attracts more attention. And nevertheless, we're still doing okay. As far as the operations concerned, and what operators are looking, the deal flow has slowed down a lot. So we've talked to certain operators who are like, what, we're just going to sit it out for the next couple of months and just wait and see, how it shakes out. The interest rates, as you know, has gone up a lot, but it's coming down already. We've seen actually after a huge spike, a decrease. So what a lot of these operators do is they're not stupid to do the deal just because of the deal. The numbers have to pencil out, right? So on the deal right now, we're actually underwriting at 5% interest rate. There might be another hike. So they already penciled it in, another interest rate hike, even though it hasn't happened yet. And they buy rate cap because most of these operators that we work with, they still do bridge loans. Some of them don't. So we have different partners, and they only do fixed debt. Some of them are more aggressive, but they're also more efficient in terms of the operation. So typically, most of our operators exit in 30 months or less.
Oh, wow.
So for them, it doesn't make sense to get a fixed, long-term debt because there's prepayment balance, right? So having said that, now there's more reserves allocated. We've also seen cash flow distributions kind of delayed, And some investors are okay with it. Some of them are not. We're going to be working on a deal that will not have a cash flow for 2 years.
Oh, wow.
We have not done a deal like that.
Is it a
We have not-
development or?
No, it's a heavy value add. But it's always good to be conservative and over deliver, right? So there might be some cash flow early on, right? But they just don't want to put themselves in that position where investors are going to be unhappy. Maybe 2-3 years ago I wouldn't even look into that kind of thing, to be honest with you. But now, knowing what I know now, we're okay with that. The track record speaks for itself for that operator. And, who am I to say what works, what doesn't? I always listen to my investors. Are they okay with that kind of deal? We talked to several people and they said no, but some of them said yes because they like the particular market, fundamentals, and location. That deal will be in Florida. I cannot disclose specifics. But this deal will be in Florida, and we have a lot of demand for Florida from an investor base. And it took me 2 years to find an operator that has a local presence in Florida. So I'm very excited about it.
Wow. Yeah, it feels like Florida is a bit newer. I know there are obviously established operators, but it feels like I'm sure, as you saw, a lot of new operators into that market. Is that what you were kind of running into?
Well, I don't talk to those new people at all. So I kind of try to ignore the noise. I get a lot of calls and requests from Facebook or LinkedIn or from referrals for people that want me and my partner to raise capital. I just ignore them because there is no large operator out there that will reach out to me. They just
interesting.
They don't do that kind of right. It's all the referral based. It's all through somebody that there is no way in hell a large operator will reach out to me on Facebook and ask me, "Hey, Alex, do you want to be co-GP? We're looking for $2 million raise." People are just silly, man. People are just silly. Do you want to be a partner with me? It's like, I don't even know you.
Yeah.
And you're offering me a partnership opportunity. Good luck.
Fascinating. Yeah. I mean, you have a track record, so they can kind of see that as well. So I'm sure that probably helps. But yeah, I mean, makes total sense, right? Those big name operators. So you're having to reach out to them and initiate the relationship.
Yes.
Okay. Yeah, that makes sense. I mean, they're so busy, and can most of these operators raise all the money on their own?
Yes.
Like, would they? Okay. So what does the conversation look like to, get them to agree to bring you on to raise for their deals?
I think it's just a conversation starter in terms of I've known you from the operational side as LP, and things change and evolve very quickly. Stock market and real estate market goes up and down. Sometimes there's a demand and supply. It's never easy to raise capital. Periodically, you might be short. You might need an additional injection of capital in the $3 to $5 million range. That's what we do, and we've done for many operators. Is that something that potentially down the road you might need help with? And just shut up and listen to what they say. Most of them will say maybe, yes, no, and they're not going to agree to it right away. They don't need it because they still don't know you. But if you stay in touch with them, which most people don't,
right,
there might be a chance down the road again that right opportunity comes along.
Yeah. No follow-up has to be one of the biggest reasons for missing out on in any sales, whatever your business is. Not following up has to be one of the biggest reasons, I think, for not getting an opportunity or not landing the sale or whatever it may be. But that's so important, right? And like, you even break it down, I'm potentially getting on the active side of some self-storage and, call a broker. Like, I can't tell you how many brokers I called, left a message, and they never call me back. Right. So
But they'll listen to your message. So I
Yep.
came from the enterprise, a large corporation background in tech. I was not in a sales role. I was more an account management role, but I learned a lot from sales executives selling, huge six-figure, sometimes seven-figure enterprise applications. And you know what they said? On average, it takes 7 touch points to get hold of somebody. So most people just give up.
Yep. Yeah.
Most people just, okay, well, I tried. I reached out to somebody, 3 times. They're not interested. Well, guess what? Maybe they were out of the country. Maybe they were out of town. Maybe they were traveling. Maybe they had COVID. Maybe they had this and that. Until you hear solid no, don't call me back ever again, you should be calling and reaching out to people. That's kind of my mantra.
Absolutely. And you can't take the no's personally, right?
Exactly.
It's just
like,
part of it.
We get no all the time, especially during race, and when it gets closed, people like, well, I made the reservation, I changed my mind. Okay, that's fine.
Yep.
Thank you. There will be another deal. We understand that you change your mind.
Absolutely. I love it. That's such a great mindset. Well, let's wind down here. And as we do, I've got 5 questions. I asked all of my guests here for the final 5. First question, best advice you've gotten from a mentor?
Stay in your lane in terms of, focus on what you're good at and avoid shiny objects.
Love it. So true. What is about your career that makes you feel like you're fulfilling your why?
I just really love working and interacting with people, new and existing investors. I was just in Tampa last week. I spent hours and hours just hosting lunches with local investors, and it's just very fulfilling. Somebody's just starting out. They're probably looking up at me a little bit because I do have track record and traction, and I love to give back and share what I know. It's very fulfilling.
Yeah, absolutely. It really is. And when you can help people, and especially in this game where you're helping people like, create wealth and passive income it's so fulfilling to see when they first, get that initial taste of it and they don't look back after that. Favorite non-real estate or investment related book?
Non-real estate. Think and Grow Rich, Napoleon Hill. It's
Classic.
like a Bible of success. So I've read it, reread it many times. I actually memorized the 6 steps. I memorized self-confidence formula because there's instructions given in the book that most people skip. Yeah, I know, I don't need that, but you actually do. And especially in the beginning where you have this self-doubt, this little noise that's son of a bitch, that's like, you cannot do this now. No, that's not you. So the repetition of it, over and over, saying something again, I can do this. I am financially independent. I live life on my own terms. I'm a successful fund manager. It made a huge difference in me.
It's so true. It really, unless you know in your head that you're that, whatever it is, right? In this case, fund manager, but unless the dialogue in your head is on the same page with you, you're not gonna
well, in the beginning it never stops, so you need to overcome. It's like a bridge that you need to cross that bridge.
Yep.
And so a lot of people kind of get stuck in the beginning. Their noise is louder, they talk them out of it, or they're kind of in the middle, so there's a conflict, like, can I do this? Can I leave my job? What about this? What about that? Oh God, they jump in the water. They see the destination, but they just can't get there.
Yeah, it's so true.
But it's
so
possible.
True.
I mean, I've done it. There's a lot of momentum that happens at certain point. It's like a tipping point, like a boiling point. It's like, that's it. I'm done. I'm a different person now.
Yep. Yeah, the imposter syndrome in the beginning is very real. You get around people who have been doing it for 10, 20 years, billion-dollar portfolios, and you're like, yeah, I raised $1 million. You're like, what?
Yeah, but they've all been there
in this room.
Yeah, exactly. They've all been there in the beginning.
Yep. Awesome. If you could have any superpower, what would it be?
Superpower. Oh, gosh, superpower. That's a good question. Well, I think I already like my superpower is I already have it, which is like I like conversations. I like meeting people. My X factor is my communication skills. I feel like there's always an area to improve in that. Become a better listener, asking more better questions, things like that. But just continue to improve in that regard, because ultimately investor relationship, it's all about people and relationships.
Yeah, this industry is all about relationships and growing your network. So I love it. Awesome. Last one. What's the best way for people to get a hold of you and learn more?
So the best way to reach out to me is probably via email or on my website. My company called Wealthy Mind. Remember, it's a mindset. WealthyMindInvestments.com, and I'm reachable at alex@wealthymindinvestments.com. So if you have any questions about passive investments or structuring and things like that, of working with large operators, feel free to reach out to me.
And they have a ton of educational content on their website. It's a really great website. I was going through it before we jumped on. So if you want to learn, it's great. And of course, Alex is absolutely available. So thank you so much for your time and all of your insight. I had a lot of fun.
Thanks so much, Jonathan. I appreciate the opportunity to share my story.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.